Welcome back, Jeff and Nikki Keye with Keller Williams Real Estate in Park City. We are visiting again today with Ace Allak with People's Home Equity Mortgage and getting updates on what is going on in the world. Ace, can you fill us in on rates, what they're doing, the different types of mortgages, if you see any issues that we need to be aware of?
Yeah, things have kind of flatlined. Rates have stabilized. You know, you're low to mid threes for conventional rates. We've had some 15 years that are into the twos right now, which is, you know, we're still in that kind of 100-year low zone. So it's a great time to buy and a great time to purchase. Like we talked about, every 1% move in interest rate is 12 to 14% of buying power. It's safe to say they're not going to go up from here. I mean, they're not going to go down more from here. So, you know, the 5-year outlook is definitely going up.
So when the lenders got hit hard with a bunch of refis, about a month ago, 6 weeks ago, and rates were going crazy because of that, they have come back down and kind of leveled off?
Yeah, they've leveled off. You know, I mean, you're looking at swings now that are more normal, like a quarter point swing, you know, an eighth, 3/8 of a point, fairly common. Cash out refi rates are up. The demand for those as securities on the stock market is down. You know, most people don't want cash outs. If somebody's looking to cash out, that's up a little bit, like, you know, a quarter. I think we're locking most cash out refis at like 3.75 right now, or 3.875. So still a good rate, but the hits on those seem to be up. Jumbo loans have stabilized as well. Same thing. If you're putting 20% down, shouldn't have any issues. There's self-employed 2 years tax returns if you're self-employed on that. High balance and conventional is the same. It's very stable. You know, in Summit County, you know, up well into the sevens. I think it's 765. You know, you can do as little as 5% down. And same thing with FHA. I know you guys had some questions on zero down programs. Zero down programs are still available. We're still doing Utah housing, and there is a conventional no MI program that's a zero down. You know, you're looking on a $350,000 house, $1,900 a month plus taxes and insurance, and I mean homeowners insurance. That $1,900 would include the PMI if you did the Utah housing.
Cool. So specifically, we were interested in maybe talking to you a little bit about a first-time home buyer. The mortgage application process, or the whole idea of getting a mortgage, can sometimes be a little overwhelming. Share a little bit about what you and your company does and the process involved.
Yeah, it's really simple. You know, it can feel a little intimidating. We're sensitive to when people go see a physician has to be professional because he's probably going to see you naked, right? Well, we see people financially naked, and we're sensitive to that, right? But it's fairly quick. You know, it starts with a consultation. You know, we do a video call like this. Normally we do it in person. Obviously right now we'll do a video call. We'll talk about what they're looking for, answer any questions they have. The next step would be to fill out an application, provide some documentation. If you're W-2'd, it's a pay stub and 2 years W-2s. If you're self-employed, it's 2 years tax returns. And with a 15-minute application and those documents, we can turn it around same day or at least within 24 hours, you know, and get some answers with specificity down to the penny and no vagueness, right? Which is how we like it. You know, we don't like to discuss it in vague terms. But another thing people don't know is that a mortgage, when you have your credit pulled on a mortgage, it doesn't hit your score like it does if you're applying for an auto loan or a credit card loan. And the reason is the bureaus don't expect you to pay cash for a house, right? They don't view it as an intent to accrue debt. Whereas if you go buy a car, you have multiple applications pulled on your car, it will impact your score. So I hear that as a concern oftentimes with first-time home buyers, but it will not affect your score. It's a different system.
Cool. Very good.
That's great. So I've heard stories about right before closing, underwriters are going back in and checking verifying jobs and new pay stubs. Anything to be concerned with there? Because a lot of our first-time home buyers are really, you know, they might be worried about their job future as well.
Yeah, it's common to do a verification of employment prior to funding. That's been happening for the last, you know, as long as I can remember, 8-9 years. It's just how stringent it's been. It's gotten more stringent now. And the reason is with some of the furloughing that's happening, you know, they want to want to make sure that the loan is purchasable. You know, you're not helping a borrower if they're going to lose their income 30 days after they close anyway. So it is something that is happening more, but it's not something that's new. It was happening pretty often. So depending on the mortgage bank, you know, if it was maybe a smaller bank that wasn't doing it as often, they may have turned up the volume. But for like us, we've always done that. So it's no major change on our side.
So you said this before, but in my mind, I just want to process one more time. On a say we have first-time home buyer and they're going out to look at homes on a $350,000 purchase price. How much down, and what are they looking at interest rate ish? And then, you know, what other, like, no money down options? Tell us more about that again.
Yeah, I mean, I'm always careful to quote rates. You know, we've always built our model not on flashing a rate up there that's a best case scenario and then hitting people in the fine print, you know. So the truth about interest rates is it's a function of a lot of things, right? So any numbers I'll give you will always be on the conservative side. I think that's better. So I want to preface it with that. So those numbers are based on, and I'm glad you brought this up because I don't want to glaze over this. Like, you can basically buy a $350,000 home right now with no money down, and your payment will be $1,900. And let's say what, $300 a month in taxes, if that, right? So you're maybe $2,200, and then maybe $50 a month in insurance. So again, those are estimates. You're looking at maybe $2,250. You know, what I tell people is hop on to KSL or rent.com and tell me what you can get for $2,000 a month right now, let alone owning a home, getting the tax benefits of doing it, and being able to, you know, write off the interest and pay off principal every month. It's a very, very unique opportunity. And every $100,000 you borrow beyond that, add about $500 a month.
Okay. Oh, that's good math.
So that's a good rule of thumb. So 100,000, 500 a month. You know, that changes. It's actually a little less. It's more like 450 or 460 right now, but going back to playing it safe on the numbers, you know.
That's great, Ace. You know, thanks for visiting with us again today. If anyone can get a hold of you, how can they do that?
Yeah, give me a call, 801-694-6439, or email me and my team at aceteam@peopleshomeequity.com. And we're happy to answer any questions. Again, that's aceteam, ACETEAM, @peopleshomeequity.com. Or reach out to Jeff and Nikki. They've got our number too. So we're happy to help anybody who needs it.
Great.
Thank you, guys.
Out there, if you have questions that you want us to address next week, email us, text us, you know how to get a hold of us, and we look forward to talking again.
Great.
Thank you. Appreciate you guys. Have a great week.
Okay.
Take care.